Good morning and welcome. You are watching Market Cafe on ET Now. I'm Nupur Talwar Surya, and joining me is Ankita Srivastav, and together we'll take you through what's happening around the world. We begin with a look at the US equity indices that have closed mixed on Tuesday as chip makers extended their sell-off, while earnings and falling oil prices supported investor sentiment. Now, the S&P 500 has gained about 0.2%, and the Dow Jones rose 537 points, while the Nasdaq 100 fell about 1%. Now, concerns over slowing AI infrastructure spending and the circular nature of data center investments weighed on compute and memory chip makers. Micron slumped about 8.8%, AMD lost 8.1%, Intel fell 5.9%, and Sandex also tumbled about 14.2%. Now, the S&P 500 futures were little changed on Tuesday night, even as oil prices rose after the US forces intercepted an attack from Iran. Now, the sector also came under pressure after the strong IPO of China's CXMT in Shanghai boosted optimism over rising competition. Meanwhile, health and consumer staples have outperformed.
All right, let's talk about the oil prices and also talk about the Asian markets and what the handover looks like. Well, as far as the oil prices are concerned, that is seeing a sharp uptick post those attacks from Iran on US. They have launched some ballistic missiles, and of course, the UK has also reported seeing some suspicious activity in the Red Sea. And on the back of escalating tensions, we have crude prices that have jumped up. Brent crude is up for almost 4.5%, trading at $87.85 per barrel. WTI is also up 4.5% at $82.7 per barrel. So that's where crude is at, elevated crude oil prices. So let's take a look at how Asia looks like as of now. Asian markets are trading mixed for now. Nikkei is down and out almost 0.7% right now, 480 points of a downtake coming in on Nikkei for now. As far as the Chinese markets are concerned, that is trading mixed. Shanghai is down 0.4% right now, but Hang Seng is bucking the trend with gains of 1.4%, and S&P ASX 100 is also in the green, trading with gains of 1.3%. But look at the implied start to Nifty also. It's almost like the oil prices are having no implications on the market for now, because usually when the oil prices see a spike, we do see the markets feeling the jitters of that all across the global markets. But Nifty is also really brushing off that trepidation, and it is showing a positive start, of a gap-up start, in fact, of more than 100-odd points as far as GIFT Nifty is concerned.
Ankita is pointing out, of course, we're going to see the effects across markets today, because there seems to be a bit of a skirmish brewing between Iran and the US. A fresh flashpoint in West Asia has come about. Iran has launched what the US Central Command calls a surprise ballistic missile attack on American forces in the region. Now, CENTCOM says that every missile was intercepted, but tensions are rising again after a brief pause in hostilities. Now, the US has also carried out retaliatory strikes in Iraq, while suspicious activity in the Red Sea is adding to shipping concerns. Now, both US and Saudi fighter jets struck multiple Iran-backed logistics and weapon sites in eastern Iraq. CENTCOM also said more than 20 US warships are now enforcing an Iran blockade across the region.
Moving on then, Trump and Netanyahu have reaffirmed their hardline stance on Iran after what both sides call a productive White House meeting. Netanyahu says that the shared objective remains preventing Iran from acquiring a nuclear weapon, while Trump warned Tehran to formalize a deal or face further military action. Reports also say that Netanyahu shared fresh Israeli intelligence on Iran, raising speculation that more Israeli strikes could still be on the table.
And Apple briefly touched a historic $5 trillion market capitalization, becoming the first company to hit the milestone after overtaking Nvidia. Now, the rally comes as investors reward Apple's lighter AI spending strategy, even as rivals pour billions into infrastructure. The milestone also comes just ahead of Apple's earnings this week and CEO Tim Cook's final results before handing over to John Ternus.
And keeping it with the earnings then, Ford has raised its full-year earnings guidance after beating street expectations on profits, even as revenue came in slightly below the estimates. The automaker says stronger pricing, better execution and a richer mix of profitable vehicles are driving the turnaround. Investors cheered the outlook, sending Ford shares up nearly 7% in after-hours trade, while losses in its EV business also narrowed.
And SK Hynix has reported another record quarterly profit, but it is still falling short of sky-high market expectations, raising fresh questions over the pace of the AI boom. Now, while operating profits surged more than five-fold, investors were disappointed by weaker than expected revenue and margins.
And Visa is cutting around 2,600 jobs, or roughly 7% of its workforce, as it restructures operations and leans further into artificial intelligence. Most of the layoffs will hit technology and product teams, with the CEO saying AI is reshaping how work gets done at the payments giant. Visa says that the saving will be reinvested into growth areas, including cross-border payments, stable coins, and affluent customers.
And on to Japan now, where the government is hoping to provide temporary relief from rising food prices. It is planning a temporary cut in sales tax on food and beverages to about 1% for 2 years, aiming to ease that burden. Now, Bloomberg reports the government opted for a 1% rate instead of 0 to avoid lengthy and costly upgrades to retailers' cash registers. Now, the proposal is expected to take effect in the April of 2027, subject to parliamentary approval later this year.
And rescue operations are continuing in Japan after a powerful 7.1 magnitude earthquake struck Kumamoto, the prefecture. At least 3 people have been confirmed dead after part of an Aeon mall collapsed following an explosion believed to be caused by a gas leak. Dozens have been injured, several people remain trapped or missing, and authorities have warned of strong aftershocks as nearly 3 lakh people have been told to evacuate.
And let's go across now to the country, where we are seeing severe rainfall in large parts. Now, the IMD has, in fact, issued fresh rain alerts across large parts of the country. A red alert has been placed for Maharashtra and Chhattisgarh today, as well as Nagpur, in fact, while Gujarat is on red alert for later this week. Heavy rain is also forecast for Delhi, Haryana, Himachal Pradesh, and several other states. Akansha is joining in with the forecast now. So, hi, Akansha, take us through what we're expecting today.
Right. Monsoon activity continues to remain strong across several parts of the country, with India Meteorological Department issuing multiple weather alerts. The IMD has issued a yellow alert for several parts of Maharashtra, including Palghar and Thane, as rainfall activity is expected to continue over next few days. Meanwhile, Mumbai's water reserves continue to rise. As of July 28, the city's 7 reservoirs now stands at 88.81% of their total live storage capacity. The IMD has also issued a red alert for extremely heavy rainfall in the Gujarat region on Friday. A red alert has also been issued for Chhattisgarh and Madhya Pradesh on Wednesday. Now, if we take a look at the forecast, heavy to very heavy rainfall is expected over Chhattisgarh and Odisha. Heavy to very heavy rainfall is also likely over Madhya Pradesh, Haryana, Delhi, Himachal Pradesh, Jharkhand, Punjab, Uttarakhand, and the northeast states. Heavy rainfall is also expected over Assam and Meghalaya, Gujarat, Konkan and Goa, Madhya Maharashtra, Telangana, Karnataka, West Bengal, and Sikkim. Now, if we take a look at the latest deficit numbers released by IMD, so as of July 28, East and Northeast India have reported 30% deficit, Northwest India is at 10% deficit, Central India is at 3% deficit, while the South Peninsula continue to report the highest deficit number at 28%. So overall, India's cumulative rainfall deficit number has narrowed down to 16% as of 28 July.
All right, moving on then, Tata Communications and Tata Telecom Business Services have partnered to launch a unified AI infrastructure platform for India's small and medium businesses, aiming to accelerate AI adoption through purpose-built voice AI agents with dedicated phone numbers. My colleague Anurag Shah caught up with both the companies to find out more. Let's listen into this slice of that exclusive conversation.
Partnership between Tata Communication and TTPSL is not new.
Yeah.
We've always been partners for a very, very long time. We are bringing this partnership to the AI era. We are going to make sure that we bring purposeful AI agents for all SMBs in the country to adopt. I think it comes from the combination of the great work TTPSL has done in serving SMBs for multiple years and the digital fabric we have been building for multiple years. So we are bringing real purpose-built AI agents to SMBs in the country.
So which sector SMB can take maximum advantage of your model?
I think the approach we are bringing is very modular. Any of size SMBs can adopt. It doesn't need a whole lot of technology. It's like buying shampoo in a sachet, right? We are bringing all the shampoo and the ingredients we're distributing in a sachet model. I think it's a very modular model. I don't think there is any size limit on which SMBs could use.
Okay. So, you were also speaking about, Harjeet, I want to understand from you that there will be a dedicated number will be there for each and every AI agent. So, how that will work, and that will be forever, that mobile number or number which you will be allocating?
See, the intention here is to really mirror the physical workflows. For instance, if you are a consumer of a certain product and services, you would want that the company that you're taking the service from is available at the end of a phone, right?
Okay.
Now, let's say that company has thousands and millions of customers. It may become impossible for them to have a real person at the end of a phone. I think what AI beautifully does is that these high volume transactional loads can be taken by AI agents. And the difference that we are trying to create here is that AI agent will have a number as well, right? So you will have multiple ways, multiple mediums of contacting this agent, and you will have, both inbound and outbound communication that will be possible with these agents to fulfill a particular purpose, right? The agents are not just there for the sake of it, whether it is, say, customer service, whether there is an agent which works on the sales side and qualifies leads. So you'll have basically an agent for different value chain components.
Okay. Ganesh, I want to understand from you, because these agents will be mainly the frontline information distributors. So do you think that that can replace the human role also, or that human intelligence or human role will always be there, that will these AI agent will just only felicitate it?
Yeah, I don't really think the real value of AI in a country of billion people is replacing humans. What we showcase today is really making sure that the SMBs have access to scale their business. Imagine an SMB in Tamil Nadu who can communicate in Oriya and communicate in Kannada and do business across the country. That scales their business. Why not? An SMB can actually imagine and operate like a global enterprise when they have these AI agents operating in multiple countries in multiple languages. So it's not about replacing humans, it's actually expanding the reach of SMBs in this country.
Well, you are watching ET Now, and still to come on the other side, we bring you all the cues that you need to watch out for.
Welcome back. You're tuned into Market Cafe. I'm Ankita, and with me is, of course, Nupur, and we are taking you through all of that you need to watch out for before the start of D Street. And let's talk about PM Modi has chaired the second high-level meeting with the secretaries. The meeting, of course, focused on promoting self-reliance and youth participation in cybersecurity. Kuldeep is joining us with the details of that.
Well, Prime Minister Narendra Modi on Tuesday chaired second high-level meeting with the secretaries. During the meeting, Prime Minister reviewed future action agenda of ministries dealing with the finance and economy, commerce and industry, and technological sectors. The meeting focused on accelerating progress towards the goals of Viksit Bharat. In fact, during the meeting, Prime Minister emphasized the need to break horizontal and vertical silos within the government. He also underlined the importance of technological self-reliance and building domestic capabilities in critical sectors. The Prime Minister stresses on that priority must be given to developing indigenous technologies. He also stated that India must achieve self-reliance in the energy sector through innovation, diversification, and accelerated capacity creation. Well, the meeting was attended by the cabinet secretaries from the key ministries and departments, and the officials from the Prime Minister's office. Well, during the meeting, the Prime Minister also pushes for focus on cybersecurity to safeguard digital systems and infrastructure. And he, in fact, encouraged greater participation of young innovators and entrepreneurs in cybersecurity ecosystem. The Prime Minister also stated that new academic courses should be planned in partnership with industry industry. He said that the workforce should be equipped with skills required by emerging and future industries. During the meeting, secretaries shared perspective on key initiatives, emerging opportunities, and implementation challenges.
And moving on, L&T has reported an in-line revenue performance for the June quarter, but operating profit and margins missed estimates as execution slowed and credit loss provisions increased. Now, the net profit, however, beat expectations thanks to higher treasury income. Ravindra is joining us live with the highlights of the con call and the brokerage verdict. So, hi, Ravindra. Good morning. Give us a sense of what we are expecting. The margins, of course, have disappointed.
Well, yes, L&T has reported an overall mixed quarter in Q1 FY27 with revenue growth of 7%, which was largely supported by early stage project execution. Although the growth was impacted by temporary logistic construction, and EBITDA also declined 3% on a yearly basis to Rs 6,116 crore, while margins came under pressure due to project execution and higher expected credit loss provisions. And on the positive side, order inflow remained robust with a 14% on a yearly growth, and the company's order book touched a record high of 7.79 lakh crore, which was up 27% on a yearly basis. And during the con call of Q1 FY27, management said that the Middle East project remained largely on track, as most projects are currently in the engineering and fabrication stage, and the company management also reiterated their FY27 growth guidance, expecting 10 to 12% growth in both revenue and order inflow, and project and manufacturing EBITDA margins of around 7.8%. And brokerages has also remained constructive on the stock, with Motilal said L&T delivered a strong EPC performance despite a challenging. The Motilal maintained its buy rating with target price Rs 4,550, and Nuvama has also maintained the hold rating with target price Rs 4,065. Nuvama said that the Middle East disruption and supply chain bottlenecks limited revenue growth and led to slight margin decline. And apart from this, Goldman Sachs has also maintained the buy rating with target price of Rs 4,370 as compared to earlier target price Rs 4,500. And JP Morgan has also maintained the overweight rating with target price Rs 5,060, and Jefferies has also maintained their buy rating with target price Rs 5,000.
All right, so that's that on L&T. We'll wait and watch out for how the stock moves in today's trading session on account of that. But let's also talk about a stock that was down and out, 4% in trade yesterday, Avenue Supermarts, after posting its Q1 earnings. Now, what are the brokerages really penciling in, and what are the targets that they have set for that? My colleague Ashesha is now joining us with the lowdown of that.
Well, after the 4.5% decline that we saw in Avenue Supermarts yesterday on the back of management commentary, which suggested that the company's store addition will be at the rate of 15% in FY27 versus 20% earlier, and the fact that the company is facing competition from quick commerce, we have several brokerage houses which have written reports. Let's start with Goldman Sachs, which is maintaining its sell stance in the stock, but they have lowered their target price from 4,000 per share earlier to 3,800 now. They say that the commentary suggests a moderation versus last year's pace with respect to store addition. Metro cities are seeing flat like-for-like growth on saturation, cannibalization, and quick commerce competition that the company is facing. Meanwhile, they've cut their estimates on the back of lower store additions, which is why the target price now stands at 3,800 rupees per share. Morgan Stanley, meanwhile, has maintained its overweight stance. 4,464 is their target price. They say analysts today offered more of the same with no aggressive growth reset, and market was hoping for broader growth strategy, which did not come through, which is why the stock tanked nearly 5% in trade yesterday. They are building in stronger growth in the latter part of this year, and the management has said that disciplined approach for margins is likely to continue going forward. So yes, for now, some brokerage houses have gone ahead and cut their target price on the back of slower growth and slower store addition in the coming years. But for now, the stock will continue to remain in focus, especially after the 4.5% cut that we saw in trade yesterday.
So hi Ashesha, morning. Now, Hindustan Unilever, of course, came out with its results yesterday. Now, brokerages, we understand, do remain divided after those latest earnings. So tell us a bit more about who's suggesting what.
Yes, another consumption counter that will be in focus is HUL after the 7% decline that we saw yesterday, the worst fall that we have seen since 2020. Brokerage houses continue to remain divided. Let's start with Morgan Stanley, where they're maintaining their equal stance, and 2,480 is their target price. They say sequentially lower volume growth was the key negative from the earnings that HUL reported yesterday. Double-digit top line and optimistic commentary are viewed positively, and they believe that the sharp stock reaction that we saw yesterday was exaggerated, which is why they are maintaining their equal weight stance with a target price of 2480. They, however, said that early tea inflation will be a key monitorable to watch out for going forward. Shifting focus to Goldman Sachs, which is maintaining its buy stance, and they've revised their target price. In fact, they've lowered their target price to 2450 from 2725 earlier. They say it was an inline quarter with the highest sales growth that the company has reported in the last 13 quarters. Volume growth moderated, but stronger pricing strategy that the company adopted mostly offset the volume decline that we saw in the quarter gone by. They've raised their estimates moderately, but they believe that sales growth is expected to accelerate going forward, which is what both brokerage houses are saying. So yes, some brokerage houses have lowered their target price, but the stock will be in focus yet again today on the back of these views that have come in this morning.
All right, HUL in focus again on the back of the brokerages, but let's also talk about Phoenix Mills that reported double-digit growth in the June quarter, but earnings came in below what the street was penciling in. The revenue rose nearly 13%, while the profit climbed over 23%, helped by higher other income and better operating leverage. Rabindra is now joining us with the highlights of Phoenix.
Well, as Phoenix Mills reported a strong growth on a yearly basis, but it was below the street estimate. And if we talk about the financials, the company reported net revenue at rupees 1,075 crore with an uptick of approximately 13% on a yearly basis. And net profit has also increased to 23%, which was supported by 29% year-on-year rise in the other income, though it remained below the street estimate. And the company's core retail business remained the biggest growth drivers for the company. Retail consumption surged 32% on a yearly basis at rupees 4,727 crore, comfortably ahead of the expectation, which was driven by the existing operational portfolio and healthy consumption trend across mall, coupled with higher tenant sales, translated into a stronger rental income. And if we talk about the commercial portfolio of the Phoenix Mill, then commercial office business also delivered a healthy performance. Occupier demand remained strong across key market, with lease occupancy improving to 72% in June 2026 as compared to 70% as of March 2026. And the hospitality segment has also reported its strong growth, where the St. Regis Mumbai and Courtyard by Marriott Agra reported RevPAR growth of 15% and a 23% on a yearly basis. But company's residential segment remained a weak point, so it was a strong numbers on a yearly basis for the Phoenix Mill, but below the street estimate.
All right, Ravindra, thanks very much for joining us on that. And in fact, that's all the time we have on Market Cafe. Goodbye from Ankita and me, but do stay with us as we bring you the market up next on ET Now.